Good morning, everyone. We are ready to begin our program.
Well, hello and welcome to the Greenwood Chambers webinar series. My name is Angèle Laborde, and I will serve as your moderator for today's session. We'd like to start out by thanking Duke Energy, the title sponsor for our 2020 The Spirit of Small Business initiative. Duke Energy is helping to keep the spirit of small business alive during these unprecedented times by supporting their customers and communities with up-to-date information, financial resources, and community donations. During the presentation, your phone line will be muted, so you will be unable to verbally ask any questions to the presenter. If you would like to ask a question, you may do so by using the on-screen webinar sidebar panel to the right of your screen where the questions box is located. Just type your question in, and we will answer as many questions as possible at the end of the presentation. You can also locate a copy of this presentation under the Handouts section in the webinar sidebar panel. Today, we are pleased to host Bryce Manning, the Southeast Region Manager from the U.S. Chamber of Commerce, and he's been with the U.S. Chamber for the past 2.5 years. He will discuss the United States, the CARES Act, which many of you are now familiar with. It's called the Coronavirus Aid, Relief, and Economic Security Act, that was passed by Congress on March 25th. He'll share how it's going to impact businesses. Brince, please begin when you are ready, and welcome.
Well, good morning. Thank you very much, and thank you all for joining. I know this is not the circumstances that I would like to join you under, but this is important nonetheless, and I hope you guys can keep hanging in there, and hopefully what I'm going to share with you today, which you may already know a lot about, is helpful in some way. So just to give you sort of an idea of the scale of the CARES Act, it's a $2 trillion package, which is just under 10% of our regular GDP in our country. And the package was designed to be robust because the idea is that this is a bridge that helps us avoid a prolonged recession and downturn. And it will allow us to get back to regular commerce quickly. In addition to the $2 trillion in face value, because some of the funds can be used by the Federal Reserve, it can be leveraged to provide an additional $4 trillion in support for the economy. We'll talk quickly about the individual provisions, perhaps most importantly, the automatic payments that the federal government is making to individual taxpayers. They're beginning the process of direct depositing these funds to taxpayers across the country. The amount is $1,200 per individual, $2,400 for joint returns, plus $500 per child. It begins to phase out after above incomes of $75,000 for individuals and $150,000 in joint income. We already know, as you saw, unemployment claims are rising. I think there were 3 million over the last week. We're expecting more of that. This bill includes some pretty robust expansions on unemployment benefits. Most importantly, most restrictions for eligibility for unemployment have been amended. If you go through unemployment, you're applying for assistance. There are all these qualifications about how long you're working, how long you've been unemployed, how long you have to wait, etc. Again, those have been amended as it's related to the coronavirus. In addition, the federal government is providing another $600 on top of the regular state benefits through July the 31st. States simply have to agree to accept this money for their residents. I'd be shocked if a single state declines it. A lot of questions have come up about whether or not individuals will remain on unemployment, particularly given this enhanced benefit. So it's important to remember that eligibility ends when an individual can return to work. So if an employer is reopening and calling employees back, and that employee is available to work but chooses not to, their individual eligibility ends. To access this, you still go through your state unemployment office, not the federal government. Okay, on to major provisions for the employers. So let's talk about this. We've broken it down into really three groups: the provisions that are available to all employers, those available to larger employers, and then the small business, self-employed, independent contractors, and nonprofits, which is where we're going to spend most of our time. Okay, on to all employers. The first thing this bill did is it allows. First, actually, let me start with the payroll tax provision for employers who pay payroll taxes. So after you write a check to your employees, you normally write another one to the federal government that covers the payroll taxes for both the employee and the employer side. What this bill does is it allows an employer to choose to delay their payment of their portion of the payroll taxes, which is 6.2% of Social Security wages, and they can delay paying that between now and January 1 of 2021. If they choose to delay that, they have to pay 50% of the accumulated total that they would have owed by December 31st, 2021, and the other 50% by December 30. Did I say? Anyway, 50% by December 31st, 2021, and the other 50% by December 31st, 2022. An important caveat here is that it generally applies to all employers, except if you have had a loan forgiven under the Paycheck Protection Program, which is the small business loan program I'm going to talk about in a few minutes. Other tax changes that are important: net operating losses. If you have a business who has an operating loss and you want to be eligible, you want to be able to use that against prior taxes paid. Now operating losses are expanded from 2018, 2019, and 2020, and generally can be carried back 5 years. And that also applies to pass-throughs and sole proprietors. If you're a business, this is primarily for corporations that have AMT credits. You can accelerate now the recovery of those. You also have the opportunity to increase your interest deductibility for 2019 and 2020. And importantly, for restaurants and retail establishments who in the past couple of years may have made investments into their property, they can accelerate the recovery of that. All these provisions really are centered on one idea. It's they're trying to improve liquidity for employers. At the moment, revenue is not coming in like it should, and it's hard to pay the bills. These provisions are trying to give employers that greater access to liquidity. It's not so much, don't think of it as reducing overall taxes. It's more about timing in this case. It's trying to give employers more access to the cash that they have today to be able to pay their employers. That's the whole goal of the big bill, now law, is to keep those paychecks flowing. Another provision that's now available to all employers is the employee retention credit. This was a late addition to the bill. Early drafts did not include it, so it really hasn't been getting a ton of attention. But this retention credit generally applies to employers. We're talking businesses, also nonprofits, for example, who are fully shut down or partially shut down as a result of the coronavirus, or have a 50% drop in their gross receipts in a quarter, and they're eligible for this until those gross receipts get back up to 80% of the prior year's amounts. So this is designed to help employers who've shut down or lost revenue but continue to pay employees. This tax credit is worth 50% of the wages paid up to $10,000 per employee. It's a fully refundable tax credit, so think about it as a $5,000 tax credit available to the employer. There are special rules in regards to this for employers with more than 100 employees and the employers with less than 100 employees. If you have more than 100, the benefit only applies to employees who you're paying but are not providing services. So if you think about your business is shut down, you've had this drop in revenue, your employee is not working, they're not teleworking, but you continue to pay them, this credit is, you can access this credit as a benefit in recognition of the fact that you are still paying them. If you have 100 or less employees, the requirement that they not be providing services does not apply. It's available to all the employees you pay during the eligible period, which is when you're shut down or when you have that quarter with a drop in gross receipts. Importantly, again, with the Paycheck Protection Program, this is a small business loan grant program. And if you receive one of those loans, because it can be converted into a grant, you cannot take advantage of the employee retention credit. We understand that employers may have cash flow problems, and one of the things for employers who take advantage of this is we expect the Treasury will be providing guidance periodically that will allow employers to get an advance on the payment of those credits, which again helps you pay your employees today. Okay, mid-size and large employers. This bill included in total $500 billion to the Treasury Department to support loans, loan guarantees, and Federal Reserve credit facilities. Federal Reserve credit facilities, if you remember them or read about them, these are things that the Federal Reserve creates, for example, to support money market funds. They do this as a regular course of business when we have a financial crisis. They used them a lot in 2008. You may remember that. 454 billion of that 500 is directly for businesses at large. There are special programs for the airline industry and critical national security businesses that make up the remainder of that 500 billion, so about 46 billion. We expect in the coming days we'll see the Federal Reserve issue more guidance about them, about the credit facilities, and launch them. They're doing so now as we speak, including terms and conditions. This is not going to be a situation where you go directly to the Treasury Department or the Federal Reserve. Instead, what the Federal Reserve is doing is supporting financial institutions in the United States for them to make more loans available. There are some restrictions that go along with this in exchange for accepting the benefit that could include stock buybacks by the company and placing limits on increasing executive compensation. Okay, let's move on to the small business, self-employed, independent contractors, and nonprofits slide. This is where we're going to spend most of our time. The provision that's getting the most attention is the Paycheck Protection Program. It's $349 billion in loans for small businesses that are generally defined as less than 500 employees. Also 501c3s, the self-employed, sole proprietors, and independent contractors. A way of thinking about this, if you have a business that is generally qualified for an SBA program, you're going to qualify for this one as well. In addition to that, some employers who would not qualify have been added to the list. That includes independent contractors and the self-employed. It also includes restaurants and hotel businesses who otherwise would be ineligible because if you add up all their locations, they have more than 500 employees. Under this bill, it says we're going to judge you in the accommodation and in the food service business on a per location basis. So don't assume that because you're not eligible for a regular SBA program that you're not eligible with this one. How much can you borrow? For this, you can borrow up to 2.5 months of your average payroll expense, except the loan cannot exceed 10 million. What you do is there's a formula to calculate your average monthly payroll, and then you just multiply that by 2.5. And I can go over that later if anybody has any questions. You will not go through the SBA to get these loans. You're going to go to your local and national lenders. lenders who are already SBA 7A lenders are automatically qualified to provide these loans. But the Treasury Secretary is given authority to designate other lenders as well, and he identified a bunch last Friday, and I think he's going to identify more as well. This is a generous loan program that's backed 100% by the federal government. There are very minimal requirements as far as underwriting these loans. There's generally, in fact, there's no collateral required, no personal guarantee is required. And a unique feature of this loan is that it can convert into grants based on what the borrower spends money on. So the way that the bill is laid out, it looks at the 8 weeks of your expenses after the date of the origination of the loan. And if you tally up everything that you spend on payroll, that you spend on rent for the business, interest on mortgages that are tied to the business, utilities, if you add all that up, you can get dollar for dollar forgiveness on your loan up to that amount. Of course, your forgiveness can't exceed what you've actually borrowed. And there are some conditions. Your loan forgiveness is reduced proportionately if you reduce the number of full-time equivalents that you had relative to a benchmark period, either the year before or the first 2 months of this year. The loan forgiveness is also reduced if you reduce wages for employees making less than $100,000 by more than 25%. That's a good time to talk about that $100,000 number. When you're calculating payroll expenses, you get to count the first $100,000 that you paid to an employee, but nothing beyond that. This is really targeted at those middle income earners. Employers can also avoid a reduction in the forgiveness because we know a lot of employers have had to lay folks off. If they bring back those employees and restore their wages by June the 30th of this year. So if you think about it, you've laid off employees or reduced wages or hours, this can help get you through that period of time. If you made the reductions between February 15th and April the 26th of this year, you'll need to restore those employees or bring them back to their previous wages again by June 30th in order for your loan to be forgiven as a grant. After April the 26th, you cannot make any changes to the number of employees or wages until after June the 30th. If you laid off an employee or reduced hours before prior to February 15th of this year, you do not have to restore them to qualify for forgiveness. We get asked a lot, what if the business is shut down, or if you happen to be in an area where the governor has said, businesses can't open? That doesn't matter for this purpose. The loan looks at after you take the loan, were you paying your employees? I mean, that's the goal, again, is to keep paychecks going to employees. All right, let's go to the next slide, and it's really information. It's a link. This link has a 4-page document that talks about, it really answers 4 questions. Am I eligible? What will lenders be looking for? How much can I borrow? And it talks about everything that you can add up, including salaries, commissions, in the food services industry, people rely on tips, for example, you include those. Anyway, it goes through all that. And then it finally answers, when will the loan be forgiven? So it's a pretty good little document to sort of shed some more light on the whole program. So I encourage you to check that out. Okay, on to something that you learned about last week, I believe, the SBA's economic injury disaster loans, also known as EIDL loans. They've been around for decades. If you've ever been affected by a hurricane or tornado, for example, you might have applied for and received an EIDL loan. Small businesses are eligible, also nonprofits, including faith-based. There's no restriction on the type of nonprofit. It's any entity that is a nonprofit that has fewer than 500 employees. Again, also sole proprietors and independent contractors. This is an actual loan. It will not convert into a grant. You can borrow up to $2 million in working capital that's going to be repaid over 30 years. And you can see the interest rates here on the slide. If you take this loan out, your payments are deferred for up to a year, so you don't have to immediately start paying on this loan. They have made it easier for individual businesses to apply. Your loan is going to be based on your credit score. You don't have to immediately produce tax returns. You can get up to $200,000 without a personal guarantee, and no collateral is required for $25,000 or less. Beyond that, there's a general security interest. Sometimes it's secured with real estate, although they're trying to move away from real estate in this particular instance. Okay, so this is a new feature as a result of the CARES Act in regards to idle loans is you can request, upon applying for an idle loan, you can request an emergency grant that they have to provide within 3 days of up to $10,000. The bill talks about what you may use the grant for, but there is no requirement. This is a $10,000 grant that does not have to be repaid, even if you're denied the loan. So you apply for the loan, you request the emergency grant, you get it, then you're denied the loan, you still don't have to pay back that $10,000. You should think about this as essentially an emergency grant for small businesses. There are some important interactions with the Paycheck Protection Program that we just talked about. Importantly, for example, if you end up with both, and you would generally end up with both because you've already received an idle loan, and maybe now that the Paycheck Protection laws are being set up, you're applying for those. You can roll them together, but you can't get double forgiveness. The $10,000, the emergency grant would come off of the Paycheck Protection Program's forgiveness. There's also some requirements with respect to the Paycheck Protection loans that you can't double dip. In other words, in other words, you can't take out 2 loans to pay the same bills. So if you're thinking about both of these, you're going to want to think through those restrictions. Don't assume that you can just stack all these together. What they have done is make the Paycheck Protection Program by far the most favorable, and then they've tacked on to other programs that don't avail themselves of the Paycheck Protection loan, including this idle loan. You don't go to your local bank if you're going to apply. This is through the SBA website, sba.gov, excuse me. This is one where we're actually checking on it. There's been a little confusion, but we do think in the long run 501c6s, chambers, can apply for it. There has been a little back and forth at the moment, and we're looking for clarification, but I think chambers will in the end be able to apply for it. Chambers, by the way, can also receive the employee retention credit, but they have to be substantially shut down or that reduction in revenue relative to the prior period. So you'll want to think through that with your tax people. Okay, on to paid sick leave. With respect to small businesses, there have also been some provisions that have received a lot of questions that don't come from the CARES Act. They come from the Families First Act, which was the prior bill, also often called the Phase 2 bill. What this Phase 2 bill included was a requirement that employers with less than 500 employees provide a paid sick leave of 10 days of paid sick leave to their employees if it's related to the coronavirus. Sick leave is obviously if you're sick, if you're quarantined, or if you're taking care of a family member who is quarantined, or if you're taking care of a child because of a school or daycare closure. Leave is paid at your regular rate, but for a maximum of $511 a day. Unless you're taking care of a family member, then it is at 2/3 the regular rate with a maximum of $200 a day. Importantly, the federal government will reimburse the employers 100% of these costs up to the daily maximum that you pay your employees. This is a refundable tax credit, and with the understanding that businesses often have liquidity problems as well, the Treasury Department is taking steps to allow businesses to request in advance on that refundable credit so that you have the resources to pay your employees who are taking this sick leave. This, of course, is in addition to what the employer already provides, including what you provide pursuant to state or local law. There's a lot of talk out there about businesses with fewer than 50 employees being exempt. The law does provide that an employer may be exempt, but they can only be exempt with respect to leave that's tied to caring for a child whose school or daycare is closed, and only to the extent that if providing the leave threatens the viability of the business. If you think this applies to you, I encourage you to check out the Department of Labor's guidelines that they're posting on their website. That will provide a lot more information and be able to explain it much more than I can. Again, Department of Labor is handling that. Finally, let's take a look at, real quick. Finally, paid sick leave is generally not available to an employee where they can telework. That only applies if the employee is taking care of, for example, a child, and they can also telework by staggering or changing their hours. Okay, now on to the next slide. Let's take a look. This bill also included paid family leave, or FMLA, which stands for Family Medical Leave Act. It's a law that generally allows for 12 weeks of unpaid leave. This was also in phase 2. The bill did say that employers with less than 500 employees are required to provide up to 10 weeks of paid family leave if the employee needs to take care of a child due to a school or daycare closure caused by the coronavirus. The coronavirus is the only reason for this extended leave. When you think about the interaction between this and the sick leave, an employee would take the 10 days of sick leave first and then would be eligible for up to 10 weeks of paid leave. Here, it's the same thing. It's paid at 2/3 the regular rate, $200 maximum a day, $10,000 in the aggregate. It's in addition to what you're already providing under state and local laws. It's fully reimbursed the same way by the federal government. There are similar exemptions for employers with fewer than 500 employees, the same as the paid sick leave, and it does not apply to an employee who can telework. And that's sort of my overall presentation. And the next slide will provide a little more information. Our website obviously has bill summaries, and then there's a website for a program that's called CO. That website is for small businesses. It has survival guides, tips, other things that may be helpful, and I encourage you to check that out. And that's all I have. I'm happy to try to answer any questions. I will say, if you're thinking about any of these loans / grants, you're going to want to talk to your lender first. You're going to want to run the numbers several different ways. You need to know what you're getting into on the front end and the back end. You really need to do some due diligence on this, but I'm happy to try to answer any questions.
All right, Brince, we did have one question come in. And if you're still on and you have a question, you can go to the webinar sidebar panel on the right-hand side and type your question in. But Brince, this question came while you were talking about small business, PPP, and it asks, will the loans convert to grants for paying accounts payable like refrigeration repair, pest elimination, etc.?
Well, I don't think so. I think it is designed, in fact, I know it's designed for payroll costs. I don't think repairs are covered. I can double check, but I don't believe so.
Okay, thank you. Do we have any more questions? Also, if you think your question is too complicated to type out, you can use the raise hand function on your webinar sidebar panel. We're going to give a couple more seconds. If you have a question, go ahead and raise your hand. All right, so I don't see any questions. You will be getting a survey after this, so if you have any more questions, you can always post that there. We are working on getting Ben Calhoun's information for you so that we can let you know how to get in contact with him as well.
Hi, we just want to share that if you've got some specific questions about this process, our local representative is Ben Calhoun with the Greenwood Area Small Business Development Center. And if you have a pen and paper, I'd encourage you to write down Ben's telephone number. Please know that he's got numerous inquiries right now, so I'm sure he will get back to you as soon as he is able. Ben's telephone number is area code 864-941-8092. And also, don't forget about your bank. Sometimes many of your local bankers and your relationships with them, they may be able to answer some of these detailed questions for you as well. And finally, we want to thank you for being on the call. The Chamber has numerous programs and webinars that are being offered this week, so please make sure to visit our website at greenwoodscchamber.org to take a look at the programs that are being offered. Again, we want to thank you for joining us on our call today. You will receive a follow-up email that will contain a survey. If you take a moment, please complete this as it helps us to provide you with valuable programs and webinars that best meet your needs. A recording of this presentation will also be attached, and the recordings will also be uploaded to the Chamber's website under our COVID-19 resource page. We're here to help you. Please don't hesitate to call the Chamber if we can help respond to a question or funnel you to a resource. Hope you have a great day. Thank you.